has been a rough year for nearly everyone in the fast food casual restaurant space. Let's say everyone not named McDonald's. Take Popeyes Louisiana Kitchen, PLKI, the fried chicken chain with more than 2,500 locations. Under the leadership of CEO Cheryl Batchelder, Popeyes has given us some phenomenal long-term gains. Lately, the stock has stumbled a bit. It's down 10% from its peak in February. Last night, when Popeyes reported, the headline numbers came in a little weaker than expected. Company posting a 6-cent earnings miss from consensus off a 64-cent basis, lower than expected revenues, just 1.6% same-store sales growth. The Street was looking for 2.7. Yet after initially plunging 5% in after-hours trading last night, stock ultimately turned around, started rallying. Why is it? I think it's because Popeyes reaffirmed its full-year guidance and committed to buying back a ton of stock. So let's check in with Cheryl Batchelder. She's the CEO of Popeyes Louisiana Kitchen. Get a better sense of the quarter and where her company is headed. Ms. Batchelder, welcome back to Mad Money.
Thank you, Jim. Good to be with you.
All right, Cheryl, it's great to see you, and I think that the stock had a nice turn in part because you basically said, hey, listen, maybe the quarter started okay, but as the quarter went on, it got stronger, and you're confident that the second half is going to be very strong.
Yes, we are, Jim. As I said this morning, we had a slow start and a strong finish. Our big box promotion in April really brought it home for us and delivered a 1.7 share point increase compared to our chicken competitors. So while value is certainly the theme right now, our team's experienced and agile at our response. And today we reaffirm that we expect a good year for Popeyes and a very strong long-term outlook.
But you're never afraid. You always are very straightforward with everybody. You said, look, the burger guys are still competition, but you seem confident that while it's going to stay competitive, that you'll have no problem even with the burger guys.
Well, you know, we believe we offer a balance of top quality food, exciting new products, and we periodically discount our core menu for our guests. When it gets a little more intense like this, we do it a little bit more often and stay in check with our competitors.
Now, you are spending a lot, and you're spending a lot on technology. You're making a lot of changes. These are going to hurt necessarily the bottom line early, but the payback will be within, what, 18 months, 2 years?
You know, it's an exciting time, particularly in the arena of technology. We announced that we're making investments to plan out a bold future and how technology is going to drive our interaction with our guests, our team member engagement, and the way we run our restaurants. And so this year is the year of planning and scoping that so that we can bring to the street and to our franchisees a very bold plan on how we're going to drive sales and profits with technology.
You know, it's so funny. When I look at your company, most of the companies I deal with in your space really don't have any room to grow. I mean, basically, you're just talking about same-store sales or nothing. They're pretty much everywhere. You've got both revenue growth in terms of putting up new stores, and you got some comparable stores gains, and yet you're still only $1 billion in market cap. That confuses me. Why don't you have a valuation that more reflects your growth path?
Well, you know, I think the growth path is being expressed and people are starting to catch on. We have the domestic growth opportunity. We have the top-line sales opportunity. We've mentioned of moving our restaurant average unit volumes from $1.4 million to $2 million. And then we have the world. We have the global expansion of this brand. And so I think, as you said, there are few brands that can claim the bright prospects that Popeyes has for the future.
Okay, you did break down in your quarter, the conference call, heritage stores versus the stores that you have to spend a lot of money on because they're new areas. Now, is that just going to be a constant theme for a while until you've, basically rolled out the whole country? Because heritage is doing much better, and the headline number's masking the strength, is what I'm saying.
So the heritage markets that I reference are the company-owned markets that we have in Memphis and New Orleans, and they are strong, wonderful, high-performing markets. We've had some struggle in our new company markets in Indianapolis and Charlotte, but all total, those restaurants are only 71 of our 2,500 around the world. So the story is in the exciting top-line and bottom-line growth for our 2,500 restaurants around the globe.
And also, please explain to our viewers again, and one of the reasons I think the stock is up is that when you do a promotion, like you did the box promotion, the results are pretty staggering.
Yes, they are. You know, when you make the best food in QSR and you offer it at a great value, people come in droves, Jim. And that's what happened with $5 Big Box. And right now in our restaurants is a one-week special called $5 Favorites. And that's the opportunity for our guests to come more often and enjoy this incredible Louisiana food.
Now, the buyback, people are saying, there's people say it's going to be 6 to 9% of the company. If the stock is in the 50s, is that where the 9% would play out?
We are so confident in our future. We've guided to a share repurchase of $80 to $120 million this year, and year to date, we've bought back over $60 million worth of shares. And so, I think that story tells you that we see a bright future and are continuing to return cash to our shareholders to demonstrate that confidence.
We've had a couple of restaurateurs come on the show, and in confidence, they've said to me, look, the coasts have gotten very expensive to get employees. That it's not just the minimum wage, but both California and the East, it does cost a great deal to get people. Is that something you're experiencing?
Absolutely. Probably the biggest pressure in the quick service industry is on labor costs. They're going up rapidly, particularly in the coast and city markets. And there are only two levers, Jim. There's leverage in pricing and leverage in becoming more productive in the restaurant, meaning fewer labor hours for our team members. And so what I've talked about is we've got to be careful about not moving on wages too quickly, because for our guests, we want fair prices, and for our people, we want fair employment opportunities and fair wages. And so as we move forward, I think cautiousness and conservatism in how fast we move the wage rates will keep our economy thriving and give the best opportunity to our guests.
Is there technology that can be used, I hate to say this, but to supplant people right now if it gets out of control?
I think you're already seeing the role of technology advance very, very quickly through mobile ordering and mobile payment type things that actually do reduce the number of interactions between a guest and our team members. And so there's no question technology is going to play a role in keeping our restaurants' profitability optimized.
Lastly, I know some people say, oh, geez, it's not healthy. I happen to love it. I just had it again when I was in New Orleans. But it seems like the Kardashians have caught on to it. Have you followed? What exactly is that? Because it's a cheat day, they call it, right?
Yeah, they promote cheat day, which we're big fans of. We make delicious, indulgent food. We are a treat product. And we're delighted that America and around the globe has found a great role for our food in their regular diet. And the Kardashians have had a lot of fun with our product on their jets, and just reminding all of America how delicious it is.
Well, I will tell you that I don't believe in the cheat day. When I'm cheating, I leave the skin on, and when I'm having my regular, I take the skin off. I eat you every day. Thank you so much. You guys are still the best. And when I was down there with my daughter at graduation from Tulane, I had to sneak in that St. Charles one. It's a great one.
Oh, thank you so much.
All right, absolutely. That's Cheryl Batchelor. She's the CEO of Popeyes Louisiana Kitchen. Stock is roaring today, and I think it's very inexpensive. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.